what financial management is. Financial management is the operational activity of a business that is responsible for obtaining and effectively utilizing the funds necessary for efficient operations. So it is covering two important aspects, that is, first is obtaining, right, that is acquiring funds, and second one is utilizing those acquired funds. For example, if we have to start a business and we require fund maybe of 10 lakh rupees, right? So what are the different sources from which we will acquire, we will procure those 10 lakh rupees, and how we are going to invest those 10 lakh rupees in such a way that we should get higher rate of return, right? So that is financial management, means how we are managing finance or money which we have in our hand for running a business, right? Now the next question arises, why do we manage finance? We have money with us, so what is the need of managing that, right? As we have discussed in the first chapter, that is management, there are two important ingredients or components of management, right, which differentiates management from the ordinary things, right? That is, those two important ingredients are efficiency and effectiveness, fine. So we need to manage finance in order to make activities more effective and efficient, fine. Now, two important functions of financial management are acquisition of funds or procurement of finance or funds, right? Second one is allocation of funds, means how we are investing those acquired funds. So when we acquire, when we arrange money from different sources, right, we have to make sure that there should be, there should be no higher cost involved in acquiring the money, right? And second one is, if we have acquired the money, right, we have to make wise decisions while investing that acquired money, so that we should be able to get higher rate of return, right, higher profits, right, so that we can further distribute those profits among the shareholders, or we can grow as a business, fine. So to increase the efficiency and effectiveness of business activities, we need to manage the finance as all other business activities, all other business activities, they depend on the money we have, right? Without money, nothing can happen, fine. So for all business activities, we need finance, we need money to be managed well, right? Now the next question is, why do we need finance? Why do we need finance? Abhi we have discussed that why we have to manage finance. Now the second question is, why do we need finance? पैसे की ज़रूरत क्या है हमें? Why do we need it? Fine. We need finance for, you must be knowing that while starting a business, in the life of a business, there are various stages. There are various stages through which a business run, right? So these three stages are establishment, growth, establishment, survival and growth, fine. These three main stages of any business are establishment, survival and growth. So we require money or finance for establishment or to start a business. To start a business. For starting any business, we require money, because without money we cannot arrange those other factors of production, labor, land, right, or labor, land, or any other thing we cannot arrange, right? Second one is to run a business. To run a business, that is survival. A business is run in an environment full of competitors. We have n number of competitors. We have to compete with them. We have to, every time we have to show, we have to prove ourselves that we are better than others in terms of earning profits, Fine. So to run in a business, to remain in the business, to remain in the competition, we need to have money, we need to have finance, right? Third one is to expand, to modernize, and to diversify. Why we need to innovate, why we need to be creative, why we need to expand, grow, why we need to diversify. We need to diversify, we need to expand in terms of growth. If a company is earning, surplus profit, extra profit, right? So that particular business, they utilize that profit for the expansion purpose, for the growth purpose, right? So for that also we require finance, or we require money, right? Now the fourth one is we have to buy certain assets, right? We have to buy certain assets. So to buy assets we require finance, money, right? Now there are different kind of assets, right? There are two main categories of assets, that is tangible assets and intangible assets. Tangible and intangible. Now what tangible assets are? Tangible assets are which we can touch, right? For example, furniture, building, these are the tangible assets, we can touch them, right? Intangible assets are which we cannot touch, but we can feel their presence. For example, trademarks, patents, right? So for acquiring these assets, for purchasing these assets, we require finance, we require money, right? Now next one is to run day-to-day business activities. Now what are the day-to-day business activities? The day-to-day business activities are that we have to pay salaries, we have to pay wages, we have to buy stationery, we have to purchase raw material, right? So for all those purposes we require money, we require finance, right? So to conclude, we can say that we require finance for establishment, survival and growth, purchasing assets, and to run day-to-day business activities we need finance. Okay. Now let's move on to the next topic, that is functions of financial management. What are the major functions of financial management, right? For before managing finance, first we have to identify, or for example, for running any kind of business, for starting any kind of business, first we have to identify that what amount of money do we require. Fine. हमें कितना पैसा चाहिए? How much money do we require? So first we have to identify based on the size of the business, maybe the size of the business, we identify the need of finance. How much money do I require? For example, if I have to start establishment, I have to start a business, and for starting that business I require 1 crore rupees, fine, and I have 50 lakhs in my hand, right? So the rest amount which I require, that I will acquire, that I will raise from different sources. Okay, so identify the need of finance, how much I have, how much I need. Okay. Now the second one is to identify various sources of finance, right? We have to, after identifying the need of finance, now we have to identify various sources from where we can raise funds. Ideally there are two sources of finance, borrowers fund and the shareholders or equity fund. Borrowers fund covers debentures, loans, any kind of loan which we get from a bank or from financial institutions, that lie under borrowers fund. What comes under equity fund or shareholders fund? Shares, issue of shares, preference shares, equity shares, retained earning, any surplus, this all lies under shareholders fund, right? So financial management looks at that, from what different sources we have to acquire money, or in what proportion. Okay. Now the third one is, after identifying different sources of raising funds, now we have to do a comparison. We have to compare various sources of finance in terms of the cost and the risk involved, right? For example, debt funds, or we can say the borrowers fund, they are less risky, fine, whereas the shareholders fund, they have high risk, right, involved. So we have to, before choosing or choosing or acquiring finances from those resources, first we have to look at the cost involved, fine, and the risk involved, right? Then only we have to make that particular source a part of our capital structure. Okay. Third one is, once we have decided upon the different sources from where we'll be raising funds, depends on the cost and the risk involved, now we are supposed to invest that amount, right? We have raised money, we have acquired money, now we are supposed to invest that money. We have to make investment of that acquired money or procured money in such a way that it is going to give us higher return, right? Or precisely, you can say that the cost of acquisition or cost of procurement, okay, it should be, cost of procurement, it should be lower than the return of investment. Or we can say that the return on investment should be higher than the cost of procurement. That depicts, that shows that we have made a wise investment decision. Fine. For example, if we have acquired, we have raised 1 lakh rupees, from someone, I have borrowed 1 lakh rupees from someone, and on that I have to pay interest of 10% per annum, right? So I am supposed to give him the principal amount, that is 1 lakh rupees, and I have to give him 10,000 rupees per year as interest. So I am supposed to give 1,10,000 to that borrower, okay, who is my friend. Fine. Now I have to invest. Now the second thing is, I have to invest that 1 lakh rupees in such a way that I should be able to fetch at least 1,50,000 rupees, so that I'll be able to have profit of 40,000 rupees after deducting that principal amount of 1 lakh rupees plus 10,000 rupees, which is interest. So now I have that 40,000 rupees in my hand. So in a way you can say that whatever amount I have acquired, on that I should be able to get something surplus, which I'll be further using for investing in my business. Okay.